Iteria Hijab is a private and local business located at Johor Premium Outlet, Jalan Premium Outlets, Indakpura 8100 Kulai Johor. With a capital of RM52,192 and 3 workers, we specialize in creating unique and stylish hijab for women. Our designs are a perfect blend of elegance, comfort, and creativity, offering a wide variety of styles, colors, and patterns that cater to every occasion, from everyday wear to special events. Each hijab is thoughtfully crafted, ensuring that it not only complements your outfit, but also provides the comfort and quality you deserve.
Hi, my name is FARAH ADNI binti Rashidi and my student ID is 2023852278. So here is the trial balance as at 30 November 2024 for Iteria Hijab Enterprise. The particular for this trial balance are purchases, sales, machinery, accumulated depreciation of machinery, written outwards, written inwards, utilities expenses, salaries expenses, promotion expenses, rental expenses, commission revenue, dividend, cash at bank, inventories, account receivables, account payable, loan from bank, capital, prepaid utilities expenses, accrued rental expenses, depreciation of machinery, opening inventory, and closing inventory. So the balance figure for both debit and credit side is 234,682 ringgit. To get the balancing figure in debit and credit side, we use sum formula from cell C7 to C29 for the debit side, while the sum formula from cell D7 to D29 for the credit side. Then we will get the figure 234,682 ringgit for both sides. Next, I will present the adjusted trial balance as at 30 November 2024 for Iteria Hijab Enterprise. I added 5 items of adjustment in debit side, which is rental expenses, inventories, prepaid utilities expenses, depreciation, machinery, and opening inventories. In adjusting entries column, at cell E16, which is for rental expenses, we put amount of 980 ringgit and the amount we'll put at cell D26 by using the formula equal plus E16. For the item of inventories at cell E20, we use formula equal plus D29 and the 22,000 ringgit will be put at cell D29. Next, at cell E25, which is prepaid utilities expenses, we use the formula equal C13 divide 15 times 2, and at cell D13 we use the formula equal plus E25. The item of depreciation machinery at cell E27 using formula equal in bracket C9 minus D10 times 10%, and at cell G10 we use formula equal plus E27. Lastly, for cell E28, which is opening inventory, we use formula equal C20, and at cell G20 we use formula equal plus E28. To get the total for the debit side, we use formula equal sum in bracket E7 until E29, while for credit side, we use formula equal sum in bracket G7 until G29. And we will get 61,057 ringgit for both sides. We use if function to fill out the adjusted trial balance column for both sides, which is credit and debit side. For debit side, I use formula equal if open bracket 0 less than C7 plus E7 minus D7 and then minus D7, comma C7 plus E7 minus D7 and then minus D7, comma and double closing word and then close the bracket. For debit side, I use formula equal if open bracket 0 less than D7 plus D7 minus C7 and then minus E7, comma D7 plus D7 minus C7 and then minus E7, comma and double closing word and then close the bracket. Then I will explain how to prepare statement of profit or loss for Iteria Hijab Enterprise. First, we need to find the gross profit by minus net sales and cost of goods sold. To find a net sales, the amount of sales need to minus with written inwards by using formula equal C5 plus C7, and we will get the net sales amounted 70,000 ringgit. To find the total cost of goods sold that amounted 39,500 ringgit, we use formula equal sum in bracket C10 until C14. Then we will get the gross profit by using a formula equal D8 minus D15. Next, to get the net profit, we will add the gross profit with the revenues and we will minus with the total of expenses. To find the total of the revenues, we use the formula equal C19 plus C20 and the total is 27,240 ringgit. The total expenses we can get by using the formula equal minus sum in bracket C23 until C27, and the amounted of total expenses will be 23,763 ringgit. Last but not least, we find the net profit amounted 33,977 ringgit by using the formula equal sum in bracket D19 until D28. I will pass it with the statement of change in equity as at 30 November 2024. First, the capital will add the net profit. To get the total, we use the formula equal D37 plus D38. Then, we minus the drawings, but we didn't have any drawings in our business, so the amount of drawings is 0. Lastly, we will get the total of capital as at 30 November 2024 amounted 86,169 ringgit by using the formula equal D39 plus D40. This is the statement of financial position as at 30 November 2024 for Eteria Hijab Enterprise. To get the amount of non-current assets, we must minus the accumulated depreciation of machinery amounted 21,170 ringgit with machinery amounted 83,000 ringgit by using formula equal sum in bracket K6 until K8. To get the current asset, we added account receivable, cash at bank, closing inventories, and prepaid utilities expenses. Then, total it by using the formula equal sum in bracket K11 until K14. The amount of current assets and non-current asset will be total to 130,099 ringgit using the formula equal sum in bracket L9 until L15. Owner's equity will be added along with current liability and non-current liability using the formula equal sum in bracket L18 until L26, and the result will show the total balance 130,099 ringgit.
Next, I will present about vertical analysis. First, I will present vertical analysis of statement of profit or loss. The amount for all particular in this statement take from statement of profit or loss. To calculate the percentage, we use the formula G5 divide G7 times 100, and then we need to log the G7, and at the column formula, we need to drag from H5 until H29. The vertical analysis highlight the net sale amounted to Rm 70,000 after deducting Rm 40,000 in returns. The cost of goods sold was Rm 39,500, represent 56.43% of net sale, resulting in a gross profit of Rm 30,500, which is 43.57% of net sale. Additional revenue from commission Rm 24,819 and dividend Rm 2,350 brought total other income to Rm 27,240, which is 38.91%. Total expenses including utilities, salaries, rental, promotion and depreciation amounted to Rm 23,763, leaving a net profit of Rm 33,977, which is 48.54% of net sale.
Hi, my name is HADZRINA SAFFIAH binti Hilmi, and today I will be presenting my company Eteria's Hijab's ratio analysis. There are three different ratios to be analyzed: profitability ratio, liquidity ratio, and efficiency ratio. Under profitability ratio, there are gross profit margin and net profit margin. For gross profit margin, the formula is gross profit divided by net sales times 100%, which is for our company, it is equal to 43.57%. So for every 1 ringgit of sales, Eteria Hijab retains Rm 0.4357 as gross profit. Next, for net profit margin, the formula is net profit divided by net sales times 100%, which is equal to 48.54%. So the company earns Rm 0.4854 as net profit for every 1 ringgit of sales. Under liquidity ratio, there are current ratio and quick ratio. For current ratio, the formula is current asset divided by current liabilities, and for our company, we get 3.26, which means that our company has 3 ringgit and 26 cents in current assets for every 1 ringgit of current liabilities. For quick ratio, the formula is current asset minus prepayment divided by current liabilities, and we got 3.23, which means that for every 1 ringgit of current liabilities, the company still has 3 ringgit and 23 cents of liquid assets. And lastly, under efficiency ratio, for inventory turnover, the formula is cost of goods sold divided by average inventory, which is equal to 1.5. By this, Eteria Hijab turnover its inventory twice a year after rundown.
CBP analysis is a management accounting technique used to assess how cost and profit react to change in the level of business activity. In the CBP, we also have a break-even, where a company neither make a profit nor suffer a loss, or whether the total sale is just enough to cover the total cost, which is sales equal to cost. Once the BEP has been reached, any additional units sold will gradually increase the company net income. So, for the selling price per unit, I choose 140, variable cost per unit 70, and the total fixed cost is 140,000. Next, Under data for the CBP worksheet, we have number of unit, fixed cost, variable cost, total sales, and profit or loss. Under number of unit, we use 1,000 for each multiply. Next, the fixed cost, we use the formula equal $F $9, which is the dollar signs we use for the log, the sales. Next, variable cost, which is the number of unit, we'll multiply with the variable cost per unit. And the formula is equal B17 multiply with the dollar signs F $A. The total cost, we use the formula equal C17 plus D17, which is the fixed cost, will be plus with the variable cost. Then total sales, we use the formula equal B17 multiplied with the dollar sign F $7, which is the number of unit will be multiplied with the selling price per unit. And the last one is the profit or loss. We use the formula equal F17 minus E17, which is the total cost, will minus with the total sales. And for your information, if we get the loss, the negative sign will come. So from the data, we can see the break-even point will happen at the number of unit 2,000, and the fixed cost 140,000, variable cost 140,000, total cost 280,000, and equal with the total sales 280,000. After we decrease the selling price by 30%, we will get the new selling price, which is 98. But the variable cost per unit and the total fixed cost still remain the same. So as we can see, when the total sales change, the profit or loss will change. So the formula I use for calculate new selling price is equal F7 multiplied with the 70%, which is the F7, come from the selling price per unit, 140. And the 70% come from the remaining from 30%. Next, for the total sale, I use the formula equal B34 multiplied with the dollar sign F $28, which is the number of unit, multiplied with the new selling price. And the profit or loss, I use the formula equal F34 minus with E34, which is the total cost, minus with the total sales. So from there, as we can see, the break-even point happen at the number of unit 5,000, which is the total cost equal with the total sale, 490,000. For the first graph, as we can see, the blue color line for the fixed cost, orange color line for variable costs, red color line for the total cost, and the yellow color line for the total sales. As you can see, is the intersect with the yellow color and the green color, which is its mean the break-even point happen, which is in this graph at 2,000 unit, where the total sales and total costs are RM 280,000. So if we produce more than 200 unit, we will get increase in our profit. But if we produce less than 2,000 unit, we will get into a loss. Next, for the second graph, we decrease the selling price, which is it changed to the 98, but the fixed cost and variable cost they remain the same. So as we can see, the grey color and the yellow color intersect at 5 unit, which is the break-even point happen, and the total sale and the total costs are equal to 490,000. So from the graph, we can see that a lot different change at the second graph, which is we need to produce more than 5,000 unit to get profit. But compared to the first graph, we just only produce more than 2,000 unit to get a profit. But unfortunately, if we produce the second graph less than 5 unit, we will suffer to the loss.
In conclusion, the purpose of financial statement is to provide information about the financial position, performance and changes in financial position of an enterprise that is useful to a wide range of users in making economic decisions. It includes statement of profit or loss, statement of changes in equity, and statement of financial position. Based on our statement of profit or loss, HADZRINA Hijab got RM 33,977 for the net profit. As for the statement of changes in equity, capital as at 13 November 2034 is 86,169 after adding the net profit. For statement of financial position, the balance amount for HADZRINA Hijab Enterprise as at 13 November 2024 is 130,099.